So next up is Josie Malandrino, Sales Director at Ivari, and her session is entitled Embracing Disruption. Disruption's a word we've heard a lot lately. Expect to learn how you can engage your younger clients to adapt to tech, regulation, and demographic shifts. Josie, welcome. Good to see you here. And I know this topic couldn't be more timely and everybody's really interested in it.
Thank you so much, Jonathan. Thanks for the great intro. Good afternoon, IDC advisors, and a shout out to IDC for having me here today. I'm excited to talk to you about embracing disruption, the future of the insurance industry. So let's get started. What is disruption? I'm sure many of you have used the word before, and here is your, typical dictionary definition. But think about disruption and life insurance together, and that's what I want you to keep in mind for the next 25 minutes about disruption and life insurance. So what are some examples of disruption? Generally speaking, disruption in various industries has been driven by innovative companies that have redefined markets and consumer expectations. Google, for instance, they revolutionized information access, while Amazon transformed retail with e-commerce. Netflix changed how consumer media goes through streaming, and Tesla disrupted their industry with the automotive industry with electric vehicles. Each of these companies not only introduced new technologies, but also shifted consumer behavior and industry standards, which is key to my presentation. Can you think of examples that have caused disruption? And I'm sure you can, not just focused or narrowed into these four companies, but there's many disruption within different companies and various industries. There's disruption all around us. Previously, for instance, you had to go to the store and buy your music and bring it home. Even with cassettes or CDs, you still had to go to a record store, purchase your CD or your cassette, and then of course you would bring it home and you would listen to it, right? Or you would put them in your trunk, and then you had all these tapes or CDs that you would listen to in your car. Then with the Walkman, your music could go anywhere with you, wherever you wanted. As long as you could carry those tapes with you, you could listen to music. But then we had the invention of the MP3 player and of course, the portable iPod. There was no need to go to a record store. Everything was there. Now you have the iPhone. And let's be honest, the iPhone is a huge disruption. You're able to do anything in a dime, listen to music, stream movies, go on social media, you name it. You have access to anything, anytime, any place. So how big is that for a disruption? But why is the insurance industry so slow to adapt? Yes, we've been disrupted, but why do we have a rough go with adapting to changes while many other industries have adapted seamlessly? The insurance industry has historically been characterized by its cautious approach to change, often lagging behind. We've been known as the dinosaurs, right? Even when comparing us to the investment side, right? Very difficult to adapt to technology and practices. And this raises the critical question about the reasons behind this slow adaptation. Factors such as regulatory constraints, legacy systems, risk-averse culture, all of these have contributed to us being very slow to adapt to the changes that are ahead of us. But the industry needs to evolve in response to changing to consumer behavior, to technology, and to many advances. So let's explore this particular topic. In today's rapidly evolving landscape, several forces are significantly impacting our industry. First, demographics. right? It plays a crucial role because there's a shift in population and diversity influence market needs and preferences. Next, you got your customer experience, and that's been a really big change. It has become a key differentiator, right? Business must prioritize seamless interaction to retain loyalty. So, customer experience, customer customization, customer behavior has been a priority in this particular decade. Technology is another major disruptor, driving innovation and changing how we operate and deliver services. Lastly, of course, regulation, increasingly shaping our strategies as compliance becomes essential in navigating the complexity of our industry. And compliance has become a big thing for us. And some of us might refer to it as a disruption. In fact, when I look at our compliance department, even within ivari, in the last year, it grew by 19 people. So it has been a major disruption and has brought on major changes. So understanding these forces is vital for adapting and thriving in this environment. Millennials are all grown up, and Gen Zs are also ready to buy. So the way we research and purchase is very different than the way we purchased or our parents or grandparents purchased. Same as above, the old ways no longer cut it. Today's consumers want and expect a different experience than what the previous generations expected. Technology has made it so that it's easier than ever, for consumers to know what they want, how they want it, what price to expect, and how to figure things out. While the rules may not have changed, right? The expectation has changed. So let's set the stage. When we look at, a few years back, so let's say 2023, we at ivari conducted a study with leisure marketing, and it was about Canadian consumers and their behavior. LIMRA also has similar consumer research that they've done. And we found out that Canadians do have life insurance, but only about half of Canadians hold life insurance policies. And you know what? When we look back in the 1980s, it's a drastic change. In the 1980s, almost 80% held life insurance policies. Any ideas why that is? Can anybody think why that is? Well, there's several reasons for this decline. The first reason is procrastination. Research has shown and indicates that procrastination is the key indicator and the primary reason why Canadians lack insurance, why they don't own insurance policies. Many individuals delay purchasing life insurance, put it off to the side, often due to financial constraints or just time, simply time getting in the way. A lot of young families just feel like they're being pulled every which way. They have their work, their family life, balancing it all. They have children. One is running to hockey, soccer, dance, and all of that is truly getting in the way. Number two is cost concern. The cost of life insurance is perceived as being too expensive, but we know it doesn't have to be. And we know we can tailor it to our clients. So this financial concern is a significant barrier why people are not purchasing life insurance, especially those from lower income households. Please keep that in mind. People with lower incomes are truly the ones that need insurance protection the most, but they're the ones that own it the least. Lack of knowledge. And this is where you come in as an advisor. More than half of the consumers do not know how much insurance they need or understand the type of life insurance. They're just simply not educated. And it's up to us to bring that education to the forefront. So the lack of knowledge contributes to the low ownership rates that we have as of late. And of course, coupled with changing demographics, the focus of insurance companies and advisors has shifted over the years. Initially, many advisors targeted high net worth individuals, which led to a decline in the overall ownership of the masses buying insurance because they were kind of left behind or ignored. And then, of course, there is dissatisfaction with the status quo. There's general dissatisfaction with the current state of life insurance, and many consumers feel that the process is confusing and complex because many of them are so savvy that they're actually Googling and searching it, but they're no better at the initial search than they are once they've searched all the information, because at the end of the day, they need an advisor to bridge the search with buying the insurance. So the process is not as straightforward as we wish it to be. These factors combined have contributed to the drastic drop in life insurance ownership in our Canadian marketplace. Hence why, in a way, disruption is kind of welcoming. But why? This change obviously didn't happen overnight. It happened because people changed, consumer behavior changed, but the life insurance industry did not change. We mentioned the disruptors of the industry, but the reasons people buy insurance really hasn't changed. And although we have moved to a digital age, insurance is still sold by you, the advisor. It's not bought, it's sold. The industry went from trying to help everyone to only helping those that meant they wanted a big sale. But that has meant that many Canadians have been left behind, and we need to help that. And we need to help those Canadians get on board with buying life insurance. With this shift in the types of customer and advisors we're focused on, we left a huge hole or gap, as it may be, in the purchasing power. And now, many years later, we're still feeling that. Remember the LIMRA stats? The insurance need, the insurance gap is 8 million Canadians that don't have insurance. If that doesn't represent a huge opportunity for you as an advisor, I'm not sure what does. Consider the following demographics that are the most underinsured. Households earning under 50,000 have little or no insurance. Millennials and Gen Zs, which is ages between 18 and 42, have very little insurance or none at all. And women is the next category. So all these are the gaps of people not owning insurance. At the end of the day, the industry is actually ripe for disruptions. We have a huge underserved market. Millennials aren't babies anymore. Many of them have careers and families and need insurance. There's a genuine need for insurance. Gen Zs are now of age of buying life insurance. So we need to fulfill this gap. We need to get these people on board. And yes, consumers lack knowledge. We need to educate them. Yes, they're savvy with their phones and they're savvy with their iPad, and they Google and they search. But study after study shows that they're more confused after they research it than they were before they started. More than half, 55%, say that they don't know how much life insurance they truly need. More than 52% say that they don't understand. And a third, 38%, say don't know where to get the info. And they've never been contacted by an advisor. So studies continue to show that many Canadians lack insurance knowledge, and many Canadians need our help. Yes, there is a shift in generation. The younger generations are looking for information. They need you, they need house. Education is key. So, what else can we say? Back to the concept of disruption. Think of the amount of change that has happened in the world over the last 10, 15, 20 years. These younger generations are living through that shift. They're living through that change. We cannot continue to do things the same way. You can expect a different solution or a different outcome if we don't change the way we do business. Here is your traditional customer journey. Let's take a look at it. And this applies to just about any buying decision, big or small. There's a problem and a need or desire to do something, to buy. So the client seeks information, evaluates his alternatives, and they make a purchasing decision. And then they ponder after the post-purchase. Okay, so keep this model in mind. And let's take a look at our triggers. Do you think triggers to buying life insurance have changed? Absolutely not. The first step in the process is the problem, the want, the need, the desire. In our world, LIMRA has been tracking the triggers for many generations, and they have not changed. People buy insurance when they buy a home, when they get married, when they have a child. So things haven't really changed over the years when it comes to triggers, no matter what generation you're in. But motivators, now that's a different story. So the triggers that cause someone to think about life insurance may not have changed much over the years, but the motivators that cause them to take action have. Older generations, they were on a need or event based. They worried about their spouse, their children, death of a friend or a family member. The younger generation today, the millennials, the Gen Zs, they're motivated by something different. They like to get their ducks in a row, being responsible. Buying a home often prompted our parents. So back to the traditional customer journey. You, the advisor, initiated the contact. Most journey begin with you making contact. There might be a number of things to try that are a little different, right? As we said, a lot of these generations are confused and complexed by the life insurance industry, the lengthy paper applications, the complex underwriting process. That was the traditional journey. But if we take a look at today's journey, tomorrow's journey, the consumer is initiating the contact. They're the ones that are searching online, all these different sites, Googling, trying to get a quote, and that's where they get connected with somebody who's going to call them back. We have easy to understand options on how to run an application, an illustration. We at ivari have adapted with that. We moved from a downloadable software to a web-based portal that is really a platform that goes from illustration to application all in the same platform. So, and on top of that, there is a major disruptor with all the simplified and guaranteed issue that has really changed the way consumers buy life insurance. So as you can see, the journeys have changed. Consumer testimonials and referrals are shared online and on social media. So where do we start? Where do we go? What can you do as an advisor? I just provided you a gamut of information, and you might be thinking, well, that's great info, but what am I going to do? Well, understanding the opportunity is key. Remember what I said a few minutes ago. Education is key. Millennials aren't kids anymore, and they have insurance needs. Those are the people we should be going after. Gen Zs are also growing up. They're our next ones to attack. Going back to the new and improved customer journey, where do potential customers start? Yes, they start online. However, while the journey may start online, almost half of Canadians still want to work with an advisor. They're researching it, they're getting their prices, they're doing all of that online. But at the end of the day, they need to talk to you because the insurance process needs education. Only a small percentage would do the whole transaction online. Insurance is bought, it's not sold. And that remains the same. And that is your opportunity. And don't forget about social media. We've been saying it for years, but social media continues to be extremely important when researching the needs for the younger generation. Look at the slides. This is where everybody resides, on social media. People glued with their phones in their hands, on Facebook, on YouTube, on Instagram. You need to have a social media presence. And we at ivari have created a whole social media gamut in our ivari.ca. So if you have a contract with us, please log into ivari.ca. Don't reinvent the wheel. Use what we've done. It's gone through compliance and also through legal. So to be successful with the mass market, we need to be more efficient, right? We need to be aware. Social media, blog, targeted. It might not be a full disruption, but it's heading that way. Social media and web-based marketing allow us to be present and be in front of our customers because that experience has changed. Education. Get to know your clients. Drip education about life insurance, but don't always make it all about life insurance. Empowerment. It's the new virtual way. Prospect may already know how much insurance they need because they Googled it. So we need to compromise and find a way to allow them to be empowered so that they are part of the conversation with you. It's all about connecting with your target market and then taking action and using web-based platform and staying in touch through social media so that we can help all these underserved Canadians buy life insurance. So the important thing to take away is that you are still the key to the puzzle. Remember, while we've seen a major shift to digital world, advisors are still key to the sale. Insurance advisors are an important part of the puzzle. Around half will do their initial research online, but 1/3 will turn to family and friends. Why? Because they need a referral to somebody they trust. Remember, the industry disruptors, demographics, customer experience has changed. Technology, it's all over us, and regulation with all the compliance. So the big one is technology. We're more connected than ever. We couldn't end a presentation without talking about AI, artificial intelligence. Embrace it, use it, but they still need you as a person to make that sale. Here are just a couple of ways that AI is being used, right? Help you translate stuff, jargon that it's not understood, maybe put together an email or perhaps, create notes, help you facilitate a lot of day-to-day admin right? But here are some of the don'ts. You still have to answer questions for your clients. You still have to provide a customized solution, and you still have to help your client navigate the claim process, the application process, and whatever they're in. Clients still need that human touch. AI should be like an assistant to help you get the job done. Review, critique, and edit before using the results from AI. And don't forget, AI is still technology, and the human touch is really important. And this is what the industry could use AI for. Power chatbots, which you see, streamline processes, wider distribution, fraud detection. But the life insurance industry still needs you to be front and center. We may not know where AI is going and where it will take us in the future, but we do know that it's here to stay. So let's embrace it, and let's not make it a disruption to our business. It's going to become more and more part of our daily lives, of our home and our work, right? But let's embrace it and let's use it to the full advantage. ivari continues to invest and develop in digital tools, as I mentioned, new mobile experiences. We have the ivari ecosystem, the online change form, secure documents, ivari 360, our seamless web-based platform. And we have new business application, conversion application, and soon joining the party is the policy change app. So we are integrating everything into this web-based platform. And we have additional tools, practice management, your reason why letter, all the compliance information at your fingertips at ivari.ca. We have social media. We have different kinds of tools that can help clients figure out their insurance needs, their investment risk. We have podcasts. We have all kinds of stuff for you to use. Are you ready to be disruptive? And the answer should be yes. Adapt like a chameleon and make the change. Thank you.
As an elder millennial, I can resonate with a lot of the things you said. And personally, in my own life, unfortunately, I've seen far too many untimely deaths followed by GoFundMe pages. And we know that advisors can help that from not happening and help to fill that uninsured gap that you referenced of 8 million people and 8 million Canadians. So that's where
The
advisors.
opportunities there.
Yeah, so good. That's great. And just some kudos coming in for your presentation, Josie. So thanks for bringing that passion, and it's great to see that all of Ari's doing. And where can folks go to learn more?
So they can go to ivari.ca. If they have a code, they can, either register or log in, but they can always come to me. I take care of the GTA. Frank Sabrino takes care of Western Ontario, and we're both supported by Christopher Alcabar, who's our inside sale. So if they don't know where to go, I'm always here to help.
Love that. Thank you. Thank you so much for joining. I appreciate it.
Thank you. Have an awesome day.
You as well.